Okay, I think we're live. Hey, Brian, can you hear me? I think you might be on mute.
Let's try that again. Can you hear me?
Loud and clear. Loud and clear.
Beautiful. How's it
All
going?
right. Yeah, it's good. It's good. Okay, well, a very good morning, good afternoon, and good evening to our audience out there. So, this is the very first episode for 2022 of Future Proof, and we have a very special guest. His name is Brian Quinlivan. I hope I pronounced that right.
You did.
Uh, and he's dialing in from California, and there's a 16-hour difference between us. So thank you for doing this, Brian. A very big and warm welcome to you.
Yeah, thank you, Andrew. I really appreciate the time and giving me the platform to show what is going on in crypto for your great audience and talking about how we can react to all of this madness.
Yeah. This is and also to the audience out there, just to let you know that this is a new format that we're trying. Okay, so we're actually recording this instead of doing it live. Well, we are live now, me and Brian, but we're recording this, and then if you're in Malaysia or Singapore, we will be playing this on our usual platform at 8 p.m. tonight. So that's GMT plus 8. At 8 p.m. tonight, it'll play. And for our equities tracker members, you would have registered and signed up for a 9:15 Zoom session to then ask questions of us. So tune in and looking forward to our very first show for the year. Brian, how are you?
Yeah, I'm looking forward to this as well. I'm doing quite well. It's been a obviously a very volatile time, so our team here at Santiment has had a lot to report on, both good and bad. Obviously, the last 2 to 3 days have actually been okay, up until this mini dump, I would call it, that happened during the FOMC call that happened here in the U.S., which dramatically impacted the stocks, precious metals like gold and silver, and of course crypto along with it. So we're seeing a lot of correlation between everything right now, all kind of going down after 3 days of good gains and rebounding for crypto. So now we're in a spot where everyone's going, is this drop going to continue and follow, in the same path as stocks, or is crypto going to be able to start acting independently, which is where it tends to thrive the most?
Yeah, that's it's going to be interesting. So hey, listen, Brian, what I'll do, I'll just go through, before we jump into the thick into the thick of it. I'm gonna perhaps you can so the usual guest on this show at this time is usually Dino,
Yep.
but now Brian. So Brian's also from Sentiment. Brian, perhaps we could get you to introduce who you are, what you do at Sentiment. And then, so Brian's going to be a regular on the show now. So every second Thursday of the month, Brian will be here with us, and he will share with us insights based on, on-chain data analytics, as well as, what's happening from a sentiment analysis perspective as well. So yeah, Brian, over to you to introduce yourself.
Absolutely, yeah. So I'm the director of marketing here at Santiment. I also produce the majority of our social media content. I do insights on our channel. So I'm kind of a hybrid between a content writer as well as the marketer to try to help grow our company. And with Dino departing our company, I'm kind of taking on more of his role of producing some of the content, doing videos for great communities such as yourselves. And I've been with the team about 2.5 years. Got into crypto myself in early 2017, back when the flippening hype of Ethereum surpassing Bitcoin was really big. And I've been really fascinated by digital currency ever since. So joined in mid 2019, and that was around the time I got my MBA in marketing and finance. So this kind of came at the right time for me, and I've loved it ever since. And I really believe in the product a lot, and hope you guys do too.
That's awesome. Yeah, look, I love the platform. I look at it. I use it every day. It's definitely one of the best out there, and yeah, so definitely looking forward to having Brian on as a regular. And So those of you who are just logging in right now, whether you're logging in through Facebook or YouTube or Twitch, don't forget to like, subscribe, follow us. And if you're tuning on YouTube, click on the bell icon and choose all, right? So that every time we come on, you get notified. Tag your friends, right? If you're just tuning in, some of your friends may be curious about crypto and they're trying to find out more. Tag your friends, family, right? Tag them now, get them in. All right. Feel free if you're a member, feel free to join the Zoom session after you watch this, and then come on and ask us any questions that you may have. Unfortunately, it'd be about 5 a.m. Brian's time, so Brian won't be able to join us on the Zoom session, but I'll do my best to answer some of those questions. So do join us then. Just some announcements. We have our crypto class coming up in April. So if you're interested to find out more, do shoot us a note and put it in the comment section below, and someone will reach out to you for with more information on the on class. So okay. Again, very, very grateful that Brian is here with us. We're going to explore, crypto was going okay. And then last Friday, it pretty much took a massive dive. And it's been, it recovered a little, but we don't know. We're going to get Brian to give some insights on that. I was probably sleeping when the FOMC meeting occurred, and I don't know. I haven't caught up with the news yet. So I'm gonna let Brian update us on that as well. So look, exciting times as always in crypto. There's never a dull moment. So Brian, I'm gonna take a back seat and over to you on updating us on what's happening in the market.
Yeah, thanks, Andrew. And let me know if you can see my screen okay. I just started sharing.
Yeah, it's coming up. Perfect.
Perfecto. So as I'm sure Dino has done for you guys in previous calls, we like to kind of take a look at what's going on the social trend side of crypto on a daily basis. It gives us a good concept of what topics are really rising in the markets at any given time. Generally speaking, a lot of the discussion today has been on the Fed. I saw a little while ago inflation was trending, but it's outside the top 10 now. Meeting, of course, FOMC was up there at some point. You can actually type in, FOMC and instantly be brought to the individual social context page, and you can see just how much interest this meeting had in terms of just crypto circles. This isn't just Google searches. This is like how much a topic is being discussed on the 5 platforms that we regularly scrape data on, which would be Twitter, Discord, Reddit, Telegram, and then a few pro traders chats that we have access to. And very clearly, this has been in the public's consciousness today, and it's kind of being viewed as a primary reason for the correction that we saw today. Now that the correction has happened and it appears that we were starting to rise, the discussion is kind of going back to normal, or at least as at the rate that it was at the start of last week. So now we're sitting at a
Sorry, well that's amazing. That to see that spike, and also for the audience out there who's wondering what the FOMC is. The FOMC basically is the Federal Open Market Committee. They're the monetary policy making body in the Federal Reserve. So they meet to adjust interest rates every now and then. So yeah.
If there's too much inflation, like many are speculating there is right now, or there is objectively too much inflation, then the Fed will try to figure out whether it's time to raise interest rates, drop interest rates, anything in between, creating like a hawkish event or a dovish, bullish, what have you. And today's meeting was essentially an event saying, we intend to change things eventually, but we're not at that point yet where we're going to touch interest rates. And that surprised a lot of people who were expecting them to be raised after they were dropped lower and lower as the pandemic was hitting a lot of people. So the initial reaction seems to be a unanimous drop everywhere. A lot of people are uncertain about the Fed's decision and just how much weight it actually, or how much truth there is to it. And that's caused a lot of stocks to drop, gold, silver to drop, and crypto has kind of been heavily correlated because there's, of course, a lot of very large retail investors who play both the stock market game and the crypto game and feel a bit uncertain with the decisions made both during the meeting and following it. So obviously the interest is high on that right now. But more importantly, crypto had been on a recovery session for, the last a couple days, if not 3 days or so. And now it is in a spot where it's kind of looking uncertain again. And that's why we have, all sorts of metrics to really give us an idea. If Bitcoin was trending right now, like oftentimes we'll see like BTC on the trending page as we did on the 23rd, that would be a clear indication that the crowd is very interested in an asset. And this is an article that was written by Dino a little over a year ago, where he did a study to find that when a coin claims a top 3 position on this list, it's usually happening on a rise. And then the next 12 or so days that follow, actually up to 2 weeks, we see about a 12% decline on average. Now, on the reverse side, when an asset is dropping, like it was leading into the 23rd, we'll see the opposite come true, where a coin is claiming a position due to a massive amount of FUD, which is fear, uncertainty, doubt, related to that asset or just crypto overall. And when there's a massive amount of FUD, that's actually a good thing. And we'll see an inverse rise around that same level of 12% or so over the next 2 weeks. So right now, we're more in kind of an inverse direction to this, where we just had Bitcoin in a very top position. And now the price was rising until the FOMC event kind of took away about a third of those gains. Bitcoin is still above 36K. I believe it got down to right around 34. So right around 50% has been cut from its all-time high of just 2.5 months ago, around November 10th. And we're kind of hitting the reset button a little bit, with a lot of people just not being able to handle the volatility. They're known as the weak hands, who are kind of bowing out and letting go of their assets at a loss. And in tandem with that, if I go down to our whale activity chart, which is one of my favorites, we can clearly see that there is starting to be a bit of a rise, where the dip down to here was showing that they were only holding about 48.46% of the supply after being at a peak of 49.48. So we're talking about just about 1% of all of Bitcoin's supply dropped, which is, of course, a ton. We're talking about, I believe, tens of billions of dollars at that point. But ever since then, it's starting to rise once again. We can also change this. Instead of percent-wise, we can look at absolutes, and we can say, all right, I'm merging all addresses that hold between 100 and 10,000 Bitcoin. The reason I'm not going beyond that is because 10,000 or more are typically reserved for exchanges or very, very low active addresses that can skew our data and give us information that isn't really relevant to figuring out what those top tier actual active traders are doing. So we found that the 100 to 10,000 Bitcoin addresses is essentially the sweet spot to keep an eye on. And if we put this in numeric value, between October 24th, which was a couple weeks before the all-time high, and the bottom of how much they have held cumulatively on January 7th or so, they went down about 159.3 thousand Bitcoin, which is an absolute massive amount. 9.32 million held all the way down to 9.17 is a ton. And now that the price has really started to show signs of bottoming, doesn't necessarily mean it is the bottom. We're starting to see a rise once again, where I can drag this and see that there have been an accumulation event of about 46.2 thousand Bitcoin, which is quite a bit itself. We're not quite near that top again, but it's at a point where it's clear that the key stakeholders are starting to accumulate. So from here, where the price was 41.8 down to where it is now at about 36.5K, the fact that that price is going down while the whale holdings are going up would be a very promising sign to factor in.
Hey Brian, that's I mean, for the audience, that's so here's the thing, right? Because of the transparency of on-chain data, so data that's on chain, we actually get to see, granularity, right? That's never been seen before in capital markets, for example, in the stock market, right? So here you can actually see the activities of very large Bitcoin holders, and you can actually see how much they have removed from their holdings and how much they're accumulating. You can actually see whale behavior. So this, just to point out, this is, in traditional investing in the stock market, this hasn't been so much possible. So this is you can actually see what they're doing, and if you're doing the opposite of what they're doing, that just means that you're selling to these very large holders of Bitcoin. Yeah. Thanks,
Well
Brian.
said. Well said. I mean, you can look at that, exactly what Andrew just said. You can look at that behavior of the smaller holders. Really, I think beginning sort of with the 1 to 10, but if we go beyond that, let's see. Where are the coins actually being removed from is the question. Yeah, okay. So it's sort of happening with the 100 to 1000, but the 100 to 1000s we can actually see are kind of inverse to what's happening with the 1000 to 10,000. So these smaller addresses are actually being merged into larger addresses, and that's why this pink line is going up. And if we went even deeper, 100,000 to 1 million is going way up. 1 to 10 is, so these are non-existent. It looks like it's mostly like those 1 to 10 coin addresses and 0.1 to 1. They're starting to flatten out a little bit. And I think that's where the accumulation is coming from these retail holders.
That is interesting.
Super cool, yeah.
Yeah.
So, of course, that's on the whale side. But there are so many other things we can look at. And I've pre-populated a lot of different charts that I can demonstrate here. One other important one that I'd call kind of a top 4-ish Mount Rushmore type of metric would be the token circulation of Bitcoin. And that is the amount of unique tokens, excluding things like wash trading, where they're moving the same token back and forth over and over again. This is the amount of unique tokens in terms of all the fractional Bitcoin put together, how much they're all being moved on a daily basis. And this 7-day trend line of circulation helps sort of smooth things out and give an idea of how much circulation is actually occurring on the BTC network during all of this volatility. And if you look at this trend line here, we were clearly seeing a dip starting in early December that it still hasn't recovered from. And the price was kind of following down. It flattened out about here, and circulation continued to go down. So at this point, if we see something like this with price, but circulation is looking mostly like that, like that, then it's kind of semi a bullish divergence. And we've got a model to show that off. And I can definitely tell you that the last, week or so, when it started to go up more like that, that's a very good sign considering the price is staying down, but circulation is starting to move up again. Not quite where it was in early December, but it's getting there. And to illustrate this, we have this, and this is known as our Nvt Analysis Model that's available to anyone who has Sandbase Pro. And it's essentially telling us how much or how safe the amount of circulation is compared to where the market cap currently stands. And right now, we're actually in semi-bullish territory after what looks to be about a week straight of good circulation compared to the falling market cap. So it was already starting to look better due to the fact that things were dropping off after the all-time high, but circulation wasn't nearly as bad. And now that it's actually moving up while price is going down, that's an even better sign that the on-chain utility of Bitcoin is looking quite strong. So, that is a very good sign for the utility aspect and just the overall, prospects of Bitcoin's future in terms of price action. We also have another metric known as daily active addresses, which works similar to token circulation, but we're counting the amount of unique addresses moving on the network instead of the amount of unique tokens. So this gives an idea of just how many players are in the game and willing to transact, whether things are kind of staying flat as they were in late December, or when things get super volatile, which they have been ever since really the new year or so. And it's not quite looking as good. Obviously, with circulation, we're starting to see a bit of an uptick with daily active addresses. We're sitting right around there or so, where we're getting about 885 to 890 daily active addresses. But if we look at it'll help if we get a moving average. So I've turned that on here. This is a 30-day moving average. And we can see that it really hasn't moved down much, but it is dropping a little bit ever since peaking right at this all-time high here above 68K. So yes, it was rising going into the all-time high and it's been falling ever since. But the smooth moving average says we're still getting a little over 900,000 active addresses per day, despite the drop. And going back here to 6 months ago, July 27th, we were getting around 800K active addresses per day. And the price was actually a bit higher then than it is now. So that's a slight bullish divergence as well, because daily active addresses are up slightly over the past 6 months, but price is down slightly over the past 6 months.
Wow. That's interesting, isn't it? And once you smooth it out with the 30-day moving average, you really see that it's pretty consistent. Well, with a
Yeah, I
slight
mean, it
decline.
definitely goes through the noise with that 30-day moving average to show you that,
Yeah.
even with these big drops that are mostly weekend days, that's when you
Yep.
get less utility.
Yep.
The overall average week isn't changing much since the all-time high. So we're in a relatively safe place for daily active addresses. Circulation is arguably actually a little bit bullish according to our model here, showing that it's in light green, yellow green, so like a 4 out of 5 on the bullish scale.
Yeah.
So utility is looking pretty good. That being said, Santiment, as our name kind of conveys with the play on words, we care a lot about social activity as well and what crowd speculation is doing to the price at any given moment. Right now, we just saw a really big spike in social dominance. This was the day that Bitcoin actually showed up on our social trends page and was starting to get some renewed interest. So highlighting just social volume here, you can see that there's actually starting to be some significant increased interest starting from right around there. And if I highlight social volume again, I know the gray line is faint. I can't change that color. Sorry about that. But it's definitely a rise in the amount of discussion relating to Bitcoin. And that's a good thing, considering the rise in social volume is happening as price is falling. Like we just talked about here, when the peak hype is happening, that means the direction of the price of that asset tends to move in the opposite direction once it hits that peak hype. So this is kind of an inverse situation going on right now, where if things continue, we'd be seeing some pretty good outcomes for Bitcoin as long as social volume stays up. Now, if I remove social volume and only look at social dominance, we're seeing kind of a similar trend. I'm actually going to back this out to a year because it's pretty fascinating what's been going on. Social dominance, if I add a, let's see, it's on 12 hours now. I'll change that to 1 day. So each line move is 1 day exactly. And then I'm going to add a 30-day indicator, smooth moving average. Look at how a year ago, the amount of discussions related to Bitcoin was up in the high 30%. So dominance is measuring essentially the percentage of discussion related to Bitcoin versus the other top 100 assets in crypto. So everything was very much focused around Bitcoin and not altcoins at that point. But after the year that altcoins just had in 2021, which was a very positive one, look at how the gradual amount of discussion related to Bitcoin has declined, with obviously plenty of wavering in between. Got to a low point here in early December and hasn't really risen much since. So the percentage of discussion related to Bitcoin is way down. It's less than half of the discussions that we were seeing a year ago today. And that is a bit concerning because crypto tends to bottom out when the rise of social dominance starts to happen. So like after this, for example, this early May drop in social dominance took the price down with it because everyone was so euphoric about altcoins at this point. This was around, Bitcoin had its all-time high here, and then Ethereum and many other altcoins had their then all-time highs right around here. So Bitcoin wasn't being discussed much at all. And then boom, price just drops and altcoins dropped even more than Bitcoin's price. And suddenly focus was back on Bitcoin. So eventually we saw a bottom. And as prices started to rise, everyone immediately started going back to altcoins again. Rinse and repeat. And look, we're still back down now, but starting to rise just a little bit.
Yeah. That's interesting. Hey, in the excitement of our very first show, Brian, I forgot to mention to the audience that none of what we discuss here today is financial advice or should be taken as financial advice. I'm just getting an expert here, Brian, to help me read the tea leaves and and what our interpretation of the data tells us, and obviously depending on what metrics you're looking at and how you combine them, that tells different stories. So whatever we talk about today, we're just two friends having a chat and exploring some on-chain metrics to see what's actually to try to figure out what's actually happening in the market. So if you want financial advice, go to your licensed financial advisor for that. Me and Brian, we're just two guys having a chat.
Yeah, thanks for pointing that out, Andrew. We stream every Friday at 7 a.m. Pacific. So I think with you guys 16 hours ahead, it would be something like your Saturday night or
Friday night. I think maybe I think Friday night.
Friday night. Yeah, thank you. So it would be like your late night on Friday. So we have this channel here, Santiment Network, which you can always subscribe to and catch any of our streams. And I always kick off those streams by letting everyone know all of the metrics that we're going over are to be considered, probability assessments based on what history has shown the last time we've seen patterns like this. It by no means indicates that price is always going to do the same thing every time circulation is up and dominance is down, what have you. So just keep in mind that we make our assessments just like everybody in trading, even the experts and the Warren Buffetts out there. We all make our assessments on trading based on what the most likely probability is, not that something is going to be a certainty just because, you know, one metric is up and another metric is down.
Yep. That's right. So yeah, so if you're up on a Friday night, I think it's close to 11 p.m. Friday night or midnight. Tune
Should be
in
11,
to tune into Brian's the Sentiment Network. I used to go for walks around the neighborhood at that time, and I just put my AirPods on and I'll have it. I'll be listening in and watching it on my phone sometimes.
Yeah. And it's a great way to interact live too. We take the last 20 to 30 minutes to take any questions. So if someone has some really obscure project that they'd like us to look into, we can look into it. If someone wants to look at a meme coin, we can actually just take a look at how Elon looks or whatever else. And it's a lot of fun, and we really try to make it an interactive experience.
Yeah, that's awesome.
So going back to the metrics here, I can continue and give you a few more leading indicators. I know we still have, 15, 20 minutes left, Andrew.
Yeah, we've got 30 minutes left. So yeah, we're good.
Even better. Yeah, just let me know if I'm rambling too much, because we can only touch on so much. It's always just the tip of the iceberg that we can show in 1 hour.
No, definitely, and it's good for our audience to familiarize themselves with it's a whole new set of metrics that, I mean, if you're a traditional investor and you've been looking at PE ratios and all the other accounting ratios, you may not be familiar with the type of metrics that we're talking about. And with crypto, if you're ever looking for some sort of guidance or metrics to measure against, to have a baseline against, it's on the Sentiment platform, and it's a whole new ballgame. Like, these metrics are somewhat new, and it's definitely foreign to traditional investors. So so tune in every month and every week on Sentiment live stream to learn more about this. Okay, Brian, back to you. So we'll continue exploring a few more metrics, and then I've personally got a question about a coin that I'm interested to dive into.
Totally. Yeah, I'll breeze through a few more metrics here on the Bitcoin side, which is kind of a reflection of where crypto at large is going. And then we'll take a few questions from you and anyone else who wants to look at a specific project.
Okay, let's go.
So we're looking at MVRV now. This is another Mount Rushmore metric that we really think highly of. This measures the amount of average returns, or I should say returns from the average trader, in this case from the previous 30 days. So it's kind of that middle ground, not 1 year, not 1 day, swing trader time frame that is good for kind of weekly ebbs and flows in the market. And when the 30-day average trader returns are well into the positives like this means the probability of a top forming is quite likely. You can see the biggest extreme version of that happened in late February, where the MVRV got way up to about plus 28% or so at the then all-time high of 58K. And then there was this big drop off that pushed the MVRV back all the way into negative territory here. And once it got into negative territory, that means the average traders were at a loss. And what do you know? Once they were in a loss status, the MVRV or price, I should say, pushed right back up, and then rinse and repeat. It goes super positive again and corrects. So you'll notice the MVRV isn't just a one-to-one match with what price is doing, because there's FOMO and FUD and all sorts of stuff in between the price fluctuations that can cause average traders returns to lose more than the market is or gain more when the market is. And when they're gaining a lot, obviously, we just want to be careful and be wary of a correction. When they're losing a lot, that's the time when you want to kind of recognize that there's blood in the streets, and we want to, it is more justified to enter a position or add on to your current position at this point, because so many people are feeling the pain in a metric that always hovers around this 0% line, because crypto is a zero-sum game, just like any other sector out there.
Hey, Brian, I've actually got a question about the MVRV metric. Is that a 30-day like moving sort of metric? So it calculates the last 30 days
Yeah,
each day?
yeah. It's
Yeah.
essentially the 30-day returns.
Okay.
So, from today, we're looking at something like December 27th or so, and
Okay.
how those traders who entered the markets then are performing based on a 30-day basis if they open their position then. So it's kind of, it isn't looking at any specific traders in particular. It's looking at like a hypothetical return from people who started their positions here and are now sitting at about 10%, negative 10%, which is relevant because we typically look at right around negative 15% and
Hmm.
positive 15% as those ultimate zones where prices tend to correct if the MVRV goes above or the MVRV goes below. You'll notice that it just went below that negative 15% threshold just about 3 to 4 days ago. And what do you know? The price started to jump right after it did. Same thing here. The price bottomed out on December 4th after this huge crash, and at
Hmm.
least temporarily jumped back up into kind of a more normal negative range there.
This is a really powerful metric, by the way.
Yeah, we think
Yeah.
so too. We made a model on it as well.
Oh.
For those people who have Sandbase Pro, you can just plug in into our Sandsheets model here and make your copy, and then enter your API, which you'll receive upon becoming a Sandbase Pro member, and it will allow the data that shows up here in this pre-populated uh, area to start compiling in real time. And it's taking all of the data directly from these charts that I was showing over here, putting them in a Google Sheets spreadsheet, and it filters into this chart that's starting to form. It's of course doing a refresh. It loves to do this when I'm presenting it. Just reset and start to refresh, which takes a couple
Of
minutes.
course.
But after a minute or two more, it's going to basically show that the majority of assets are sitting close to this opportunity zone, and the opportunity zone is essentially the same as what this negative 15% line is. So you can look at it not just for Bitcoin, but quickly get a snapshot on about 30 to 40. I can't remember how many assets are on here. Mostly top caps, like within the top 100 to 150 or so.
Hmm.
On assets like mostly ERC20s that we have this data on.
Yep.
And it's going to show that the average returns across not just the 30-day, but it's averaging it out for 1, 7, 30, 90, 6 month, and 1 year. All of those extreme time frames, when
Hmm.
it gets too hot, like in that top 10% for buying, this is showing how close it is on an average scale. And for the few assets that are in negative territory, how close it is to a danger zone, which is the equivalent of being close to this line up here.
Wow. Your jaws to the audience out there, your jaws should be dropping.
Yeah, we really like it. It gives a nice,
Yeah.
easy perspective of how risky a purchase or a profit take would be at any given time from the perspective of uh, if you were to do it now, how much trader pain or trader euphoria there currently is. So we like it a lot.
That's amazing.
Let's see, we've got about 20 minutes left. I'll show one last metric here, and then we'll just take a few questions and
Sure.
wrap it up until next month. But
All right.
yeah, what we're looking at now is the funding rate for Bitcoin. We have 4 main exchanges where we have metrics on Sandbase. The first of which would be Binance. So what we're looking at when we look at Binance's funding rate is the amount of leveraged longs versus leveraged shorts on their futures markets, and how how much they are putting their money where their mouth is, like we saw in the social kind of like sentiment related stuff, how much they are actually longing. Here, I'll just take off the other three so it's not overlapping. But this shows when there's like some crazy longing going on, like we saw close to the top here, or when there's some crazy shorting, when we saw all of these negative lines prior to the bottom forming. As you would expect, traders are impatient by nature, and they long when prices are already going up, and they short when prices are going down, which, you know, by definition should be the opposite of how you strategize your trading strategy. You want to buy low, sell high, but a lot of people try to buy high, sell low, which means a lot of these traders are losing money. And when you see the really inflated funding rates where longs are paying shorts, that's when you see these big corrections happening, which are essentially liquidating all of the longs going on, or the people shorting here. You know, when you see all of these negative funding rates, a lot of liquidations happened right here when we had this big surge up at the end of July. And rinse and repeat, you know, you saw it again here just prior to the all-time high. And now we're starting to see shorts again. They aren't extreme levels of shorts, but it's actually a good sign that capitulation and weak hands are evident compared to what was kind of the normal range here a month ago. So if we're seeing these negative rates here, like we're seeing the last couple of days, they're not quite at the levels they were at the extreme bottom in June, July, but it's a good sign that buying now against all of these shorts that are forming would be a less risky proposition than normal.
I mean, you know, Brian, if you look at that chart, like right in front of us, it almost seems too obvious, doesn't it? It
Yeah,
just seems so obvious.
it
Yeah,
seems like an easy game when you look at it, right? But
yeah, that's right.
there's still anomalies that happen. Like if you're just immediately selling when you see like a positive funding rate, like here on March 3rd, you'd be kicking yourself. Yes, you would have been able to sell it at a very short-term top, but by the next day, you know, after the funding rate flattened out, look at how
Yeah,
it just skyrocketed once again while some of these long funding rates were going on. So it's a tricky game, and you
yeah,
want to make sure to keep your strategy um, in kind of a macro level instead of like going just day by day. Okay, everyone's
yeah,
shorting, I'm going to buy. Everyone's long, I'm going to sell.
yeah,
It's not quite
yeah.
that simple, but it can be helpful to have this kind of perspective in mind.
Yeah, yeah, and you know, mind you, you know, the funding rate can actually change, you know, hour to hour, right? It could be
Right.
-1 and positive the other, and yeah.
Yeah, one thing about Binance's funding rate is they only update theirs every 8 hours, interestingly. But the
Mhm.
other funding rates, if I go to like
But
FTX, for example,
yeah,
they update every hour. So if you're looking for something more granular, yes, it's not as big as the largest exchange on the planet, Binance, but you can get more granular data if you're really looking for short-term trade opportunities. And you know, we look at just the last, let's say, last 3 weeks or so. Um, you know, you can, after I go filled area to show positive versus negative, you
hmm,
can really get an idea of when things are starting to get super fuddy and super FOMO-y at the same time.
yeah, yeah, yeah. Cool.
So yeah, that's
So
just a little on funding rate, and we can take the last 15 minutes here to focus on a few questions, and I'll show whatever I can.
okay, well, hey, thanks for that, Brian. That's awesome. It's amazing. And you know, it's such when you actually look at it and you realize how much data. I mean, you guys have put in so much work into this platform,
Yeah,
and just to present it in a very easy to use and easy to read format, you know, visually, so you can very quickly do an assessment and kind of form an idea of what's actually happening in the market, you know, over time and currently.
right.
And then obviously that's not your only input into one's analysis, right? You'd be looking at what's happening in the market, what news there is. Are we having FUD news or are we having some very positive news? And then you make your assessment and judgment and make a judgment at that point on what to do next for your portfolio, because everybody's portfolio is different. So let's switch gears and look at one of my favorite coins, Ren. Now, I'm just gonna put it out there that I do hold Ren in my portfolio, and hence why I'm interested in this app. It's an interesting, because during the weekend when the dump happened, there seemed to be a massive drop in its price.
Yeah, Ren has taken quite a beating, going all the way back to the very beginning of October when it hit its, I believe this was the all-time high, correct me if I'm wrong, of about 126, 127. And then ever since then, yeah, go ahead.
Oh, I think the all-time high was 180 something back in February of January or February of
You're
last
absolutely
year.
right. Yeah, my
Yeah.
mistake. I forgot. Ren went on an absolute tear a little under a year ago. That was
Yeah,
insane.
it's crazy. Yeah.
So, but yeah, at least in more recent times, going back to just the last 6 months, if I hold down Shift, let me full screen this. If I hold down Shift right here, let me get it right on. Okay, there we go. So I'm holding down Shift. Notice the top left of my screen showing the percentage difference. Ren's dropped about 3/4 of its price just in the
Wow.
past 3.5 months now, close to
Wow.
4 months. So that's huge. That's obviously
Massive.
a big plummet, and a lot of altcoins have looked like this. It's not just Ren, but Ren is probably one of the more extremes out there. It's definitely dropped more than average in that time span. With that, many people will immediately say, oh, okay, it's one of the biggest droppers during this bear market that's been going on a couple months. It must be one of the mathematically most important or justifiable, that's the word I'm looking for, buys out there because it simply dropped so much. That's not how it works. You know, you want to look at, with projects being so speculative by nature, you actually want to look at what's going on behind the hood and see when circulation is starting to pick up, which it looks like it's starting to do. And you want to make sure, you know, that traders are in pain, as you would expect. So like looking at the 30-day MVRV, if you remember that negative 15% rule, if I mark that, we're still way below the negative 15% mark at about negative 19%. It actually got as low as negative 43%, which is, you know, probably the largest negative percentage of MVRV for Ren in well over a year.
Yeah. Yeah. I think the lowest it had gotten was negative 51 point something.
Let's
So it
check
got
that
pretty
out.
close. Yeah.
Yeah, let's look at the last. Yep, you're right again. Yeah, it got even lower here in May, where if I zoom in, it looks like the MVRV just dropped off an absolute cliff and got to negative 53%. So that would be a clear sign that the bottom is near.
Yeah.
Even though, you know, the price ended up dropping further, if you were to buy in at this huge negative spike on May 19th, the price would have still risen until it really got out of that danger zone, at least. Sort of. Actually, it looks like it's still under, and because of the zooming, the line has changed a little bit. But
Yeah.
never mind. Just understand that probability plays a major factor when it comes to MVRV. And right here, for example, this would have been more like spot on where you're buying the bottom, and you would have been pretty happy with the eventual rise of Ren to plus 75% over those next 4 or 5 days. So things can change in a hurry, and MVRV is a really good one to look at for Ren and other altcoins.
Cool.
We can also look at how whales are doing. I think that's always an important one to check out. I usually like to look at that range between $100,000 and $10 million for kind of the retail holders in most cases. So with Ren at about 31 cents, that would mean that the smallest group we'd want to look at would be from a percentile supply distribution basis. Let me make sure to get rid of anything else. Let's get rid of that. I'm going to go 100,000 coins, which would equal about, sorry, I take it back, 1 million coins, which would equal $300,000 or more. And I'll cap that at about, well, this will go to infinity, but let's just see what it looks like.
We might need to readjust the time, the date.
Yeah, sure. I'll go to last year.
Yeah.
Okay, so this is a pretty nice perspective. So this is all addresses of Ren that are holding $300,000 or more. And it's quite promising to see that as the price has been dropping, ever since about November 19th, which was about a week after Bitcoin's all-time high, it appears that the supply is being reaccumulated, and they've added about 1.3% of all of Ren's supply from those weak hands. And they follow this pattern pretty well, where they start accumulating just as the price is bottoming out, and then immediately start taking profit again as the price is rising. Now, when we look at like infinity coins, that's going to include a lot of exchange addresses, which can kind of skew the data. So just for curiosity, I'm going to take off that very top tier one and only look at the $300,000 to $3 million Ren addresses, because these are going to be more active top tier retail traders that don't quite dive into exchange addresses, and they hold about 36% of the supply. So that's a very healthy sample size that we can look at. And it looks pretty similar, but look at how they show signs of profit taking pretty close to local tops. So for example, they held not 39.1% on September 30th. And by the time it actually hit that local top, just about 4 days later, they were down to 36.1%. So they dropped about 3% of the supply leading up to that local top. And then as it's starting to drop off, they're accumulating once again with a little bit of noise in between. But it's pretty clear that these large retail investors over the last year have accumulated quite a bit, because they were only holding 26.2% a year ago today, and they hold 36% now. So we're talking about a 10% accumulation by those retail holders who are actually making active trades on a daily and weekly basis.
That's interesting. You know, Brian, I'm not sure if this will make any difference. So in terms of Ren, there's a capped limit of 1 billion tokens. And also with the Ren project, you would be creating like you need to bond 100,000 Ren to run a dark node on Ren. So whether that, so if the Ren is bonded to a dark node, then obviously it's not going to go anywhere. And I think I was looking at the inflow chart earlier, and there were quite a few inflows into exchanges for Ren in terms of so I'm guessing, and this is just I'm guessing here that maybe a few dark node holders had deregistered their dark nodes, and then they had to wait 3 epochs, so each epoch's 28 days, to then reclaim the Ren. And they may have waited for the 3 epochs, got custody of the Ren, sent it into exchanges, and then sold them, possibly.
Yeah, that's an interesting theory for sure. While you were mentioning that, I opened up the exchange flow balance metric, which can show us just how much the difference is between Ren moving on to exchanges on a given day versus off of exchanges on a given day. I'll change this to 1 day just to give us a little more of a macro view on what's going on here. It doesn't look like we're getting extreme exchange activity in the recent month or so, month and a half. But going into late October and even mid-November, we saw a few major signs of Ren moving off of exchanges that might support your theory.
Okay, that's interesting.
Yeah,
Yeah.
so well, I like exchange flow balance. It can be a nice way to kind of get a gauge on when tokens are really starting to move off or on exchanges and how that affects price. Because typically, when there's a massive amount of tokens moving on exchanges, like we saw a really good example of here in mid-February, this is generally a clear sign that a sell of some kind is being planned by addresses with a large amount of tokens. So going into this, as prices were really skyrocketing to an all-time high in February, look at all these huge spikes of in given weeks, back-to-back weeks. We had the week of February, 21.15 million REN moving to exchanges, and then 19.6 million the following week, beginning February 21st. These are huge that would typically lead to some sort of price correction based on historical probability. Even here, look at the weeks approaching this local top and how
Yep.
eventually a bottom formed as the exchange flow balance went negative and they were being moved off of exchanges, which would be a good thing.
Yeah. Yeah, that's interesting. Yeah, that's interesting. So closer to the last few days, you can see they weren't extreme. I guess it was only what 1 million, 1 point something million inflows from December, January, and then it's actually negative inflow now. So
Yeah, as of this week, we're seeing about negative 4.75 million
mm,
thus far. So that's significant data that would indicate that this could be a bottom forming right now.
yeah, interesting. Cool.
Yeah. Well, I know we've got about 5 minutes left. So if there's any other assets, especially if it's an ERC20, I can quickly breeze through and just do a quick synopsis of how they're looking.
Let's take a look at Ethereum, shall we?
Of course. Ethereum has dropped significantly from its all-time high, well over 50% from its all-time high. So if we look at, let's just go last 3 months. The all-time high, I believe, was pretty much the same day as Bitcoin's. So just a little over 4,800. If we shift and highlight down, the price has dropped about 50.6% as of now. And circulation has looked like it's starting to move up a bit ever since Christmas about a month ago. It's beginning to move up after it was on this downtrend for a good while, for about 3-4 weeks in December. And if we translate that over to our Nvt model, we see that circulation is not looking too great at all. All things considered, we are in a spot that is not justifying that market cap is in a good place to hold if circulation stays this way. I would guess the reason is because if we zoom out, it's been kind of a pretty big downtrend. Interesting to see this huge wave of noise going on, followed by kind of calmness here. But I would imagine that because circulation is used to being way up here at about 1.5 million, 1.7 million even per day, and now it's down at, even after the rise, it's about half that at 880,000, 925 as of today. That's just not going to cut it, and it's why we're seeing red these last couple months. And not surprisingly, the price has dropped as circulation has entered the red zone here. So Ethereum on the on-chain side, not looking so great. For MVRV, it's, we have this weird anomaly that happened, and I think this was due to some coin market cap error. So I'm just going to look at like the last 2 weeks. That's normally not the case, but I think with Ethereum, it was just seeing some weirdness. But Ethereum's current MVRV 30-day is right at about that opportunity zone. So if I highlight negative 15%, boom, right there, we're pretty much right on it at the moment at about negative 15.3%. So this would indicate that a bottom is probably pretty close if it maintains this. Now we could see just like a temporary jump to like, 26, 2700 again, putting the MVRV back up here. And that might be the indication that it's time to take profit once again. But as of now, you'd be in a historically good spot to add to your position or open a position in Ethereum based on average trader returns being so negative.
Well, thanks for that, Brian. That's cool.
You bet. As far as funding rate goes, at least on FTX's side, it's pretty negative. If we look at it based on the last year, it's definitely in a better spot because there's so much shorting going on, especially in the early part of the year. The longs for Ethereum were just going nuts, and they were actually rewarded with this then all-time high in May, and that followed with kind of a shorting period. But considering one of the least shorted assets is being shorted right now, that's a good sign that a bottom is near, because capitulation is so prevalent and people are really doubting the number 2 asset in crypto.
Yeah. And even then, if you think about it, from its high to its current price, it really hasn't dropped that much compared to, pre-March or maybe March 2020, right? So it's still doing pretty well.
Agreed.
Yeah.
Agreed. Yeah, and one last thing I can show is the weighted sentiment. So this is actually just the, whoops, let me make sure I get it right. I want to go 1 day back because our current day is still being tabulated, and it might show a weird number for weighted sentiment. But showing here as of yesterday, we're actually in the positive range. It means that based on average commentary, Twitter, Reddit, Telegram, Discord, and some pro traders chats, there's a little more positivity toward Ethereum now than there was compared to a couple weeks ago when we were seeing a lot of FUD and negativity going on. So all things considered, that's not the most amazing sign considering how much we've dropped off. We would ideally like to see us still be very negative toward Ethereum like we're seeing with the funding rates, but it's also in a pretty neutral spot. It's not way up here where everyone was euphoric prior to the big drop off, but it's not super fuddy either right now.
Yeah. Thank you.
So yeah, overall on Ethereum, I think it looks a little more good than bad compared to Bitcoin. Circulation isn't quite there. Active addresses isn't quite there either. It's really dropped off. So Bitcoin looks like the better bet between the two, but that can change in a hurry. And certainly after a drop of over half of its value since the all-time high happened, there's a pretty justifiable reason to add to your positions a little bit, especially with the MVRV up here in kind of that danger zone once again.
There you go.
So yeah, guys, I really hope this was helpful and you enjoyed learning a little bit about how we use our metrics effectively and make guesses based on probability, never a certainty, but educated guesses that come true more often than not by looking at these leading indicators and finding when they're in historically bullish divergences, which many are now, or historically bearish divergences as things were looking like a couple months ago around mid-November when all-time highs were forming.
Yeah, and thanks for that, Brian. So I'm gonna unshare your screen now. There you go. All right. So hey, Brian, thanks for spending the last hour with us and with our audience. I hope you guys enjoyed it. Brian will be a regular on the show once a month. This is our very first kickoff, and I hope you guys enjoyed it. It's great to have you on, Brian. Looking forward to many more shows together, and I think it's around dinner time for you, isn't it?
It is, yeah, it is. We'll be having some dinner in just a few minutes here, but I want to thank you, Andrew, for all the time and giving me and our team this platform to show off our metrics. I believe we have a code to get a discount for anyone who signs up through your link. So I'll share that, and you can share it with your audience afterward.
Sure.
So
Definitely.
always, if you guys would like to sign up, we're happy to help you navigate some of these metrics and make sure you are in the know about how to use everything.
Definitely. Well, once again, thank you, Brian, for your time. And I guess it's a wrap for our very first show.
Thank you so much, Andrew, and everybody. It's been a pleasure, and we'll be talking very soon.
Definitely. Well, thank you again, Brian, and thank you everyone for tuning in. And for those of you who are members, we'll see you shortly. Have a good one.
Thank you, guys.
Thank you. Bye-bye.